I'm very interested that Berkshire doesn't have liability insurance for its board. Do you think it makes them behave differently?
Well, I don't think so, really, because I think they're the type of people that they're very owner-oriented. I mean, they get $900 a year as directors' fees. They don't have D&O insurance. They are there because they want to be in the same position as our shareholders. And you know, if they screw up, if I screw up, you know, we deserve a lot of downside. And the idea that then we can, you know, call up an insurer and say, you know, we just did these terrible things, and would you pay $25 million on our behalf? And the plaintiff's lawyer knows exactly how much the insurance is, so that they settle for that amount. It's just ridiculous. And you know, I think if you go on a board, you ought to have some downside. You are a fiduciary for a bunch of people out there. In our case, many hundreds of thousands. And you know, the idea of laying it off on somebody else while you take the upside, I think is wrong. I think in terms of the major financial institutions, when you go to society and say, you know, we need help, and if you don't give us help, our troubles are going to bring down, you know, society, I think that whoever runs that place, and I think the board, should pay a very heavy penalty. I would be sure that the CEO and his spouse went broke under those circumstances. If they can cause problems for millions of Americans, they can start over, you know. And I don't want to put them in debtor's prison or anything like that, but let them just start over.
Maybe the stocks. We can bring back the stocks and have them.
Well, that might be kind of fun. And I think the directors should pay a heavy penalty. If they sat there collecting their $300,000 a year and didn't think about it, having the CEO incentivized so that he thought about the downside as well as the upside, I think they ought to pay a very significant penalty, and I don't think it ought to be